Welcome to tonight's webinar. My name is Brian. I will be your host tonight. As you can see, it's titled Back to Basics, Trading in what I call the quote-unquote new economy. And this will just be a market recap to fill everyone in on the fundamental and technical drivers that we've seen over the past 2 or 3 weeks since I've talked to you last. And then again, as you'll see at the end of the slides tonight, we're going to do this again in 2 weeks. So I speak to you about twice a month. Usually on Wednesdays at 9:30 p.m. Eastern. So it's a great chance for you to be able to check in and find out what's been driving the financial markets as a whole. You can see my email address down there if you have any questions, and then you also have my blog address down there where I give daily commentary so that you can stay in touch on a daily basis leading up to these twice a month webinars. And then in addition to that blog, I usually copy anything I post there onto the Daily Forex Trading Edge. So the last slide I'll show you tonight is some additional information as far as education goes. Again, you have those questions, that question tab. Please type in questions as they come up. I think that individuals always get a lot more out of these webinars when they have a question answered instead of waiting till the end or not asking at all. So please use that function. If it's on the topic, I will definitely answer it. If it's something that's individual to your situation, I might ask you to follow up with me personally. And if it's something that's totally off the topic, then again, I'll address that. So please send them over as you have them, and we'll go from there. Let's just get this quick disclaimer out of the way. And this disclaimer is very important. You obviously know that you're trading leveraged products, and you know that you can do some substantial damage very quickly to your accounts without trading plans. So, especially in these markets, which we'll talk about, that are very news-driven. So you want to be aware of that and make sure you understand what you're doing, when you're doing it, why you're doing it. Me personally, I'm also a registered investment advisor, where I'm duly registered. 1, I manage money. 2, I have an education-only company for people out there that are interested in managing their own accounts or some part of their accounts, growing their accounts, providing monthly income, using option strategies, hedging their equity portfolios and assets and things like that. So anything I say tonight is for educational purposes only. I don't know who's listening in. I don't know your situation, so remember, you guys are the ones who are pressing those buttons and making those decisions. So these are all for educational purposes only. The outline for tonight, again, we'll cover fundamental analysis first, kind of that 2-week catch-up, and then we'll go into technical analysis covering the major trends, large areas of support and resistance, going into live market examples, so current examples right now. And of course, I always show you what I call those intermarket relationships, what's going on between stocks, options, foreign currencies, futures, certain sectors, certain specific companies and things like that, where we can start to see some of these relationships that are working. Sometimes they aren't working, and that's just fine as well. But it's important to know that, and it's important to use some of those different relationships to be able to take advantage of lower risk, higher probability trades as we build in our trading plans and things like that. So getting into fundamental analysis, I'll open up a discussion of current events and what they mean for us as traders and investors. You have a link right through Interbank FX to forexfactory.com. I'm going to bring that up right now. This is one of the strongest pages out there as far as what's going on around the world with different economies. Me personally, I live in the United States. I trade most currency pairs, as you'll see on my MetaTrader 4 software. Most the pairs that I'm trading have the United States dollar in them. I live here. I can understand what's going on in this economy, and then I just have to compare one other economy against it. I'm not one who goes and trades the Australian dollar versus the New Zealand dollar. There's nothing wrong with it. It's just not for me personally. So you'll see those pairs come up that are focused on having the U.S. dollar in them. And again, reading charts, obviously, all the same rules apply, basically. And that goes for any markets. If you learn to read a chart in foreign currencies, then you should be able, and you trade well, you should be able to trade futures well. You should be able to trade options well, stocks well, whatever it may be. As far as the economic calendar goes, it's been pretty light this week so far. As far as the United States dollar goes, again, and I'll talk about this in just a moment. There's obviously fireworks around the world with Europe, Slovenia, all that kind of stuff. So we'll talk about that. But as far as data goes in the United States, it picks up a little bit tomorrow. Not a big data week, but we do get our weekly unemployment claims telling us how many people are going for that unemployment help. So that's obviously a jobs-related picture, which everybody is kind of keeping an eye on. Trade balance, not a huge mover for the most part. So you would be aware of it, but definitely not a huge mover for the markets. And then Friday we have retail sales. How's the United States consumer? How are they spending month over month? So that's pretty big. A little bit of consumer sentiment, not a big number. For the most part, but still want to be aware of it. This is a very strong page. If you don't know how to use it, I can go into that. If that's something that you'd like to learn more about, please provide that feedback. Maybe I could just spend about 20 minutes out of a 30-minute session over the next in the next month or so just on this page, because I think it's that strong, and I think it provides a lot of great insight. Overall, unemployment claims in the United States have been going up. We know that for the most part, the monthly payrolls as far as jobs that are added every month are pretty much flat recently. Retail sales have been pretty strong. People are still spending money, so we'll look for that to continue. But we have to take this all with a grain of salt. Why do I say that? Because there's a lot bigger things going on right now. Some of those bigger things are the European debt crisis. What our Federal Reserve Chairman in the United States, Ben Bernanke, is saying about inflation, is saying about interest rate policy and things like that. So right now, a lot of this data that we're used to looking at as traders and used to reacting to and used to making trading plans around, it's kind of taken a back seat, because as we know, the news is basically you can go to sleep, wake up the next morning, and Europe has been bailed out and the markets are going up, or Europe is going to fail and the markets go down. So I wrote an article about bail, fail. Bail, we go up in the equity markets. Fail, we go down in the equity markets. So it's the bail, fail trade. So as we know, news drives everything. So whether you're a short-term trader or a long-term trader, you don't want to get married to any ideas. You want to take your profits if you have them. You want to be moving your stops up and practicing good money management and trade discipline, because things can change in an instant. So you cannot trade over your account risk and trade risk equations. You can't trade with emotion, and you can't trade with some ego that you're right, and that you're sticking to it day after day after day after day, because the news is just violent. And I'll show you that in the equity markets. We moved 13% to the upside in the past 8 or 9 trading days, which is just massive, and probably a lot of it might have to do with people who are short. So we know that the equity markets can move big. We know that a leveraged product like options and forex can move much larger than most people are solvent in their accounts that can hold on. So we want to make sure that we trade with that discipline and use the charts. I'll pause once in a while just to check back and see if there are any questions. So again, please be sure to check in with that. So we're going to kind of leave this Forex Factory page, this very strong page. Other outside news that I like to tie in, I like to scan the headlines here on Bloomberg.com. And certain people will be looking for different things depending on who they are as a trader, as an investor, if they have equity portfolios and things like that. And then, of course, CNBC, the television station, is very strong because when I'm using this page, this is all kind of done. I'm doing this tonight. I know what's coming out tomorrow. I know what's expected. And then I don't really have to look at this tomorrow, because if I'm in front of the TV, CNBC is going to tell me what's going on. So wherever you're trading from, whatever country, Bloomberg obviously is worldwide. CNBC is in many countries. So it's nice that you can hear them tell you what the number is. And then, of course, they're going to give you their analysis on it. We have to filter that data. We always have to filter that data. You as an individual are different than anybody else out there. You have to filter what that information means to you and how you're going to use it to trade, how you're going to use it to invest, how you're going to use it to protect your assets and portfolios. So remember, what I do as a boutique consultant is I work with individuals one-on-one, teaching them to trade, teaching them to invest, teaching them to grow their accounts, teaching them to create income off of their portfolios using option strategies, teaching them to protect their hard-earned money and their investments that they have in IRAs and retirement accounts and pension plans and things like that. So I cross all of these sectors, and that's what we'll talk about tonight. We'll bring in some of these intermarket relationships, as I call them. So that's the fundamental catch-up. The economic calendar is there. tons and tons of earnings coming out over the next few weeks, and then obviously be careful of the news quote-unquote bombs and the fireworks, as I call them, because they seem to be going off daily. All right, so that's your fundamental analysis catch-up. And there's just your tools basically that I mentioned, so you can write them down if you need to. All right, going on to the next slide. Technical analysis. What are the traders doing with all of this fundamental news? Major trends, support, resistance, areas where they're buying, areas where they're selling, and then show some of those intermarket relationships. Let's start. I think the proper place probably to start would be just jumping into the S&P, and this is a 6-month chart that we're looking at. And you can see what I'm concentrating on here, because basically we met a few weeks ago. So what I'm concentrating on is just the most recent data. You can see overall August, September, and October, we've kind of been sideways for the most part, trending lower, but this violent move here, and I'm not sure if this is, that's not SP. That's the wrong chart, so I apologize. I'm going to bring it up right now. I was thinking that doesn't look as sideways as I thought we'd be looking at. Let's bring up SPY if it likes that better. Okay, here we are. So this is just the ETF that represents the S&P 500. So the SPX, the index would be just 10 times this. This is 10% of the value. So we're looking at the TV and they're showing 1220, 1200. We're just going to see 10% of that. So very, very sideways August, September, and October. We did make a new low down here recently at the very beginning of October, and then we turned around very quickly. So from down here, we were at about 108. Today, we were as high as about 121. All right, so if you do the math, 121 minus where we started at 108, that's a $13 move. $13 of a $108 stock is 12%. So we've moved up 12%, and you can count them. 1 day, 2, 3, 4, 5, 6, 7, in 7 trading days, a week and a half since basically last Monday. It's a big, big move, 12% in 7 days. We're back up here at all of this resistance. So this is basically the broad market, the broad equity index, the S&P 500, and we have a ton of resistance going sideways. And if you actually look at the intraday today, look how we went climb, and in the last hour we gave back a lot. This isn't chump change percentage-wise. 122 down to 120.5 basically. So we almost lost $2 basically. And again, percentage-wise, $2 of a $122 stock is 1.6%. So we gave back 1.5% roughly in about an hour today. We hit that resistance area, and just to show you, a lot of us like to look at the VIX, whether you're an options trader or just a trader in any market. So take a mental image of that picture right there, where we peaked at 230 roughly, and I'm just going to type in VIX. All right, it's going to be a mirror image. It's going to be just upside down. So look where we bottomed out at 230, and we went 30, 30.5, 31. So again, $1 of a $30 stock, percentage-wise, 3.3%. Very, very significant moves. Looking longer term, this is a little bit more telling. Look at the 6-month chart of the VIX, the volatility index. Remember, when it goes up, that means for the most part the stock market's going down. When the VIX is going down, that means the stock market's going up. So here it is since early October. VIX is going 45, 40, 35, 30. Percentage-wise, huge move down. The stock market went up 13% over that same period. Look at this support level. Here's where they're buying the VIX. They're thinking the stock market's overvalued, the volatility is too low, and I want to protect my equity portfolio. So I'm going to buy calls on the VIX, and I'm going to buy the VIX and it goes up because I see support, and hopefully the stock market rolls over and goes down. So people are using the VIX at 30 to get bullish, and hopefully if the stock market rolls down, the VIX goes 30, 31, 32, 33, 34. So we're in this tight range in the VIX, and we're in that same range in the S&P, going very, very sideways. So we're at support in the VIX, and we're at resistance in the VIX. We're at support in the VIX and resistance in the S&P. All right, moving into foreign currencies. So we now know that over the past week and a half, we've made a massive, massive move up in the stock market. Let's look and bring up the pound versus the US dollar on a daily chart, and let's get some time frames here. So early October, here we are in early October, we bottomed out, and we started to head up, and the low in the pound was 52.70, and now we have been as high as 58 even, roughly. So about 7 pennies to the upside. And again, that matches when the stock market's going up. There's the pound getting stronger and stronger and stronger. Let's see what the euro against the US dollar did over the same time frame. The euro has a low in early October as 31.30, so 31.40 roughly, to 38.40, 8 pennies in the euro to the upside against the United States dollar. Let's look at the Australian dollar since early October. Okay, 93 to 102, so nine pennies basically. All right, and we'll come back to the Aussie dollar in just a moment. New Zealand dollar, same thing, bottomed out in early October and went up. So what's the relationship that you're seeing here? When the equity prices run up, as of late, there's been a relationship that the dollar has gotten absolutely hammered. And if you guys were trading last Friday, I'll show you the euro last Friday. The stock market had been up for all of last week, big, and sometimes Friday we sell off or we go sideways, but the markets, the equity markets, just wouldn't sell off last Friday. So last Friday was the 7th, and basically what you can see here is in the euro on Friday, we had this big move up, and we did drop a little bit late for the most part. But I'm going to see what the pound did as well on that Friday, because it just seemed like they weren't letting it drop that much. Remember, the stock market was very volatile on Friday. It was up 80 points, then it was down 80 points, and it was flat, and it was up 80 points. But they just weren't hammering. They weren't really buying the dollar. Even though the stock market was going down, they were selling off the pound and euro, but they weren't doing it really, really, really big. So, again, here's Friday. Here it is Friday in the pound. And remember, the stock market was up, down, flat, up, down, flat, up, down, flat. Negative pretty good, like a up 80 to down 80, 160-point swing on Friday. And look what they did in the pound. They just keep buying and buying and buying. And then we came in on Monday in the equity markets, and all the world markets were up big. The United States was up 3.3%. It's almost like they knew something. So that's what I mean by is there's all these rumors going on out there, and every day things change around the world. And that's what I mean by you can't get egotistical and married to an opinion and say, I'm going to hold on to this, I'm going to hold on to this. I think it's very, very hard markets to be trading, for hours and days in a row. I'm an intraday trader in foreign currencies. I do swing and intermediate trading in options. I'm playing a lot of defense and income generation, things like that. In foreign currencies, though, I just think there's too much going on and you're too leveraged to just sit with positions over and over and over. So if you're going to sit with long-term positions, you've got to make sure that you're trading a small amount of contracts that you can sit and wait for 100, 200, 300 pips maybe against you to make 3, 4, 500 pips your way. And if you don't have the account size to do that, you just can't do that. So most clients that I teach are intraday traders just by default because they don't have the account size to trade long-term in leveraged products. As they get larger accounts, as they're looking at a big equity portfolio and big retirement over here, and their foreign currency is a big part of their trading, but it's a very small part of their overall account, and they're using it for defense and growth and things like that, then we can start doing swing and longer-term trades. But for the most part, if you're trading $1,000, $5,000, $10,000, $15,000, $20,000 accounts, you're probably, for the most part, a pretty short-term trader, and there's nothing wrong with that because there's plenty of volatility out there. That's something I did last webinar, was on trading psychology, and you can look it up on the Interbank FX YouTube website, talking about account sizes and what's right for people. So that's what I'm big on, is making sure that you understand who you are as a trader and what size to be trading and what style of trading, intraday, swing, intermediate, long-term. You've got to know what size account you have and start there and start to dig in who you are before you can start, saying, I'm going to be this trader. I heard on the TV about this option strategy or this. The markets tell us what to do, when to do it. We don't tell the markets what to do. They tell us what to do. What strategy, when to do it, how to manage it, when to get out for a loss, when to get out for a target, for a profit. That's very nice. We have somebody, the market, telling us what to do, and that's how it should be. The market is bigger than any one individual. It tells us what to do. So you have to remember that it dictates how active we are when we're in the markets, when we're out of the markets. So again, we've seen just the markets run up recently. Huge moves to the upside in anything but basically the United States dollar. going back to the Australian dollar, I did want to just show you this. Actually, before I pop into the Australian dollar, we'll just finish up our daily look. So we're going to reverse things now. This is the United States versus the Canadian. So the chart basically, on a longer term chart, we should see the United States dollar weakening, so the chart should be going down. So here we are in early October, and the United States dollar was 106, and now it's at 101, so it lost about 5 pennies. And finally, look at the Swissy over the same time frame. The Swissy is kind of its own little animal, not as violent a move to the downside for the most part, but again has lost value, 93.30 to 89. So again, another 400 pips, 4 pennies there. A lot of you know that I like Fibonacci retracements. I'm not too big. Am I knowledgeable about all of the technical indicators out there? Yes, but I like to keep it simple. I don't junk up my charts with a lot of indicators. Basically, what you see is what you get right here. I may throw a Fibonacci on once in a while. So I was just kind of keeping an eye on the Australian dollar. And again, this is what makes charting fun. Everybody will look at charts differently, trend lines differently, support differently, resistance differently. They'll draw their Fibonacci's and do their Elliott waves. They'll do everything a little bit different, but that's what makes the market. So I was just looking at this most recent move down in the Australian dollar as it lost value against the United States dollar, and then we climbed back up. And this is basically what we did is we dropped huge from 108 and even up higher, 110, all the way down to basically well below parity to about 93 cents. And here we come screaming back 93, 95, 97, 99, 101, 102, and we've climbed back 61% basically of that move. That's a big move. That's 2/3 back. So we're 2/3 higher than where we were before, just of this recent move. So of this move, we're now 61% back of that down move. And so what I was thinking is, here's the stock market going up, 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 up. Here is stock market approaching resistance, moving up 12 to 13% in 8 days. It's going to have a down day at some point. I just don't know when. But now I can use my intermarket relationship. If the stock market's going up and I'm seeing the dollar get weaker, so the pound is going up, the euro is going up against the dollar, the Aussie's going up against the United States dollar and New Zealand, I might want to get short and say, if the stock market stops going up and goes sideways or down, then maybe this huge move up in the Aussie dollar versus the United States dollar, it might stop. So I just like to do these Fibonacci's to give me an idea of where I am in space. Well, I just came back 61%, and if I'm going to short, I could say I might use that Fibonacci as an entrance point. That gives me my new resistance line, and I hope that that resistance line, that 61.8 line, holds and we roll off. And if we go higher, the stock market busts through resistance, that might drag the Aussie dollar through, and I have my stop. So a short-term trader could get in and risk 10 or 15 pips to make 30 or 40 pips, but this is a longer-term chart. So this is probably someone who's willing to risk maybe 100 or 150 pips and put their stop up here and maybe try and make 100, 150, 200 pips as it rolls back down, something like that. So when you're looking at more data like this on a daily chart, it's hard to be a short-term trader because you're looking at such a big amount of movement. If I bring that down to a 15-minute chart, you see that the Fibonacci is right here. If I can still use that same Fibonacci, but if I'm an intraday trader, I might say, I'm going to get in when it hits 61.8. I'm going to put my stop 10 to 15 to 20 pips above, and if it rolls down 30, 40, 50 pips, hallelujah, and that's basically what it did. That happened here. Again, I was aware of this earlier today. I was talking about this on the Interbank FX Connect. It's something that I watch, so I knew that this was occurring, and that's why I kind of brought it up. I'm not saying that this is the holy grail. Use Fibonacci's, use 61.8 every time. I'm just using this because this is an example. 50% works, 38% works, 78.6% works, moving averages work. They all work. You just obviously have to know how to use them, what markets to use them in conjunction with trend and support and resistance, all that kind of stuff. Let me just check back here and see if we have any questions. So just a question came in about the Fibonacci's, those levels. The main Fibonacci levels are 38%, 50%, and 62%. Those are the main ones that are used a lot. Just the idea is, if you know how to draw them and you can say, wow, we were here a couple weeks ago, we were here at the bottom of the move last week, and now boom, in 3 or 4 days we're way up here, 50%, 61. What you're just saying is we've moved that amount, and that might give you some guidance to say, I think it's overbought or oversold. And you can use those Fibonacci's on a daily chart. So that was a long-term chart on the Aussie dollar. Let me see if I can find it. Go back to the Aussie dollar and show you that on a shorter-term chart. So the Aussie dollar is on the daily. We have a big move down, and we've rallied to about 61.8%. And if I show you just an intraday chart, so this is just today, basically the 11th of October. Let's see, someone might do something like this, where they might be looking at this big move up and saying, hey, equity markets are up, Aussie dollar's up, I understand that relationship, and they might have drawn a Fibonacci like that and say, hey, this thing can't retrace at all. It went from 98.70 this morning to 101, basically 70 almost. It went 3 pennies. That's a massive, massive move in the Aussie dollar overall. I do a lot of standard deviation trading, so I did a webinar on average trading ranges. Make sure you look that up on the Interbank FX page, because it's very, very good to understand what the average trading range is for your stock, so you can trade stocks and options, what it is for your forex pair, so that you understand what it does normally in a day. Well, it moved up 250, 300 pips, and then it can't go down. It can't go down. It goes sideways, sideways, sideways. Big move up, small retracement, big move up. So people could see that there was buying going on here. And what was the stock market doing all day? It was going higher and higher and higher. So I can show you that on the intraday chart of the S&P. Let's just look at a one-day chart and see that just until late, obviously, it trended higher and higher and higher. So while we're looking at the Aussie dollar, this was the spider just going up, small retracement up, and then finally late in the day it did come off a bit, and that's probably reflected in the dollar strengthening a little bit. So you can use these Fibonacci's on any time frame. It's just a guidance. Big move up, can't go down, big move up. And that's what happened on Monday. Let me show you what the S&P did on Monday, basically, and Tuesday. That's a very telling story. So here we are, we come in Monday, we closed here Friday, we opened up and we went up 3% on Monday. And then what do we do Tuesday? We go sideways. So people loved it down here, and then we went up 3%. We went up 330 points in the stock market, and they loved it because it couldn't go down. And then Tuesday, the next day, well, if it's going to go down, what a great place to sell the markets. They're way up high every day, day after day, and then here we are 330 points in one day up. Nope, no selling. So when you go up big and you can't sell off, chances are you're going to go higher until eventually we exhaust that pattern or that trend, and we do run into resistance or a chart pattern or whatever it may be, or some fundamental news comes in and sells us off. So keep that in mind. If you've ever seen a stock that has good earnings or bad earnings, but let's just use good earnings for example, like Google. Google once went like from 450 to 500, went up $50 in one day on an earnings event. And the very next day, if people thought it was going to be cheap, they would sell it. But the next day it went 450, 450, 445, 450, 445, 450. Well, if it was a good value at 450, and now it's at 500 and no one is willing to sell it, that means there's a lot of interest and there's no sellers around, and then it goes 515, 520, 530, 540. So you can start to feel the supply and demand just by seeing if a big move happens and it doesn't get retraced, then it's likely to be followed by another big move. And that's what we're seeing day after day in the stock market. There's no sellers. Today, pretty significant sellers came in, so it'll be interesting to see. I talk about trends and sequences and failures and targets. It'll be interesting to see if we can get back above this 122 mark. So as far all I'm concerned tomorrow is seeing what we do at the 122 mark if we're able to get above it. If not, and we start to see some resistance come in, maybe some sellers are saying, finally, there's fair value up here. We're too expensive, and we can do some shorting up here. So let's watch what happens at 122 in the S&P. Let's watch what happens around this 61.8 line, around 102.5 basically in the Aussie dollar, US dollar. Let's go back to the pound and the euro. So again, on a daily, look at the pound. So we were rejected up here around 58 even. Let me bring that to a shorter time frame. So let's watch what happens tomorrow around this. We'll get new news probably out of Europe. We'll get new news out of the United States. Let's see what happens overnight if this provides some resistance. Remember, keep it in context. We went 52, 54, 56, 58. Okay, big move up. If we retrace a little bit, that's fine. I'm not saying it's all doom and gloom and buy the dollar, but I'm just saying whether you're short-term or long-term, you can start to see if there's some resistance coming in and play it. And if we go down, maybe that's a good buying opportunity for the pound. Who knows? So let's go back to these PowerPoint presentation. So what are the traders doing with the news? Well, we know they're buying the crap out of the stock market and they're selling the crap out of the United States dollar. Major trends we were able to see: support and resistance. Not so much as far as looking at support and resistance. Very, very short term, we were able to see some resistance there on the Aussie dollar. Over the past 3 months, we were able to see some resistance in the stock market, in the S&P right here around 122, 124 in that area. So some intermarket relationships. What's the United States dollar doing in reaction to equity prices and things like that. Next slide here, just to review. Pay attention to the economic calendar. Pay attention to the fireworks coming from around the world with people speaking and in policy and things like that from certain governments. Technical analysis. Understand which way the trend is going. Understand where they're buying. Understand where they're selling. That helps you find good locations for low risk, high probability trades. And as we all know, no guarantees. That's why we put stops in. That's why we have trading plans in. That's why we trade the proper amount of contracts for your account size. And then obviously understanding any edges out there that are provided by these intermarket relationships. And going into the last slide, next webinar, I'll be talking to you guys in 2 weeks, same time, so Wednesday night at 9:30 Eastern. Same thing, I'll catch you up on fundamental analysis. We'll have lots to talk about over the next couple of weeks. Same thing, technical analysis. We'll be looking at major trends, where they're buying it, where they're selling it, bringing those intermarket relationships. I've got about 9 recordings on YouTube. Go to there and see some of my past videos on Fibonacci's, on trends, on support, on resistance, on moving averages, on trading psychology. Lots of good education from your broker right there. I do post every day pretty much to Daily Forex Trading Edge. Please check in there. And again, that's my own blog, but these two topics are basically going to be the same. And then there's my email if you have any questions. And then intraday, you can follow me on that Interbank FX Connect, and I have that pulled up here. So my name is the Locals Take, so I have that pulled up right here. If you're not using it, it's pretty interesting. Again, you have to filter the information for what's right for you. I'm not really worried about people looking at my trades and what I'm doing. I'm really trying to provide you with my intraday context of what's going on, what I'm seeing, support, resistance, those relationships and things like that. So you're welcome to follow me, and I try and post there throughout the day as market activity dictates. All right, so we will wrap up. Again, feel free to reach out. Let me just check very quickly if we have any questions as we wrap up. Looks like we're good to go. So thank you very, very much for your attendance. I look forward to seeing you and catching up with you in a couple weeks. And please feel free to reach out in between and take advantage of all the great education on the blog, on Daily Forex Trading Edge, and in the Connect room in between. Have a very good evening.